Hi, I am Nicole.McGann, resident and real estate agent in South Jersey, and today I am here with Jessica Pettit. She is the president of Professional Services Agency in Marlton, New Jersey. Today we are going to talk about New Jersey exit tax. I've learned quite a bit in the last, couple of hours since we've been talking.
Definitely.
So, thank you for talking to me about this.
Thank you for having me. Hello.
All right, just to start, what is the New Jersey exit tax?
So the New Jersey exit tax is a tax that is assessed on the sale, the gain on the sale of your main home.
And who collects it and why?
The state of New Jersey, and they collect it because they're assuming that you will have a taxable event at the end of the year when you report the gain of your home.
Okay. So they're assuming that you're going to owe them money, so they just collect it without even knowing what the...
That is correct.
Okay, what you actually owe.
Mm-hmm.
Got it. Okay. So when does that come into play?
That comes into play at settlement. You have to do, basically you have to let them know the gain of the sale, which you may not be subject to the tax. The gain of the sale will be, I think it's like 6% they withhold at the table.
Okay.
They record it on your closing disclosure and send it off to the state of New Jersey on your behalf as an estimated payment.
Okay.
Assuming again you'll owe the tax on that. But there are ways around that. There are laws that allow you, loopholes that allow you not to have to report that as taxable income.
Okay, so what are those loopholes? So there's loopholes so that you don't have to do that. What are those loopholes?
So the federal government, the Internal Revenue Service, has a tax law that states that if you lived in your main home for 2 out of the last 5 years and it was your main home, you can exclude $250,000 of a gain per person every 2 years.
Okay, so most people will qualify.
Most people will qualify, and the state of New Jersey follows the feds with that law, but the state of New Jersey doesn't know if that qualifies, and will not know until you file your tax return.
So,
So the money you can get back, 99% of the time my clients have gotten it back.
Okay.
But there are also ways to make to where you qualify to not have it withheld at the table.
At all. Okay. So the loophole is you can't earn more than basically $250,000 if you own it by yourself, or $500,000 if you own the home with someone else.
Correct.
So once, but even if you aren't making $500,000 on your home, what are the ways that you can prevent them from taking it to begin with?
So you have to, there's a couple different ways. When you go to settlement, you have to prove that you have a New Jersey driver's license, or that you're going to be filing a New Jersey resident income tax return for that year.
Okay.
Or that you are going to another New Jersey address.
Okay.
So there's a form that you fill out before settlement, and your real estate agent will give you that form to check off one of those 3 options, and then they will not withhold that money at the table. Okay. So again, you can either prevent it now or wait until you file your taxes, let them hold the money interest-free for a whole year, and get it back when you file your taxes.
But there's no upside to them taking the money?
No.
Okay.
No.
Especially if you don't owe it to begin with.
That's correct.
So have a New Jersey driver's license. Prove that you're not leaving the state of New Jersey.
Correct.
And lastly, what's the third one?
File a New Jersey income tax resident return.
So how would you prove that? With the form?
Well, you would just mark it off on the form, give it to your real estate agent. Okay. You're telling them, you're giving giving your word that you're filing a tax return.
Okay. Right. Okay, so say you don't do those 3 things. They take your money. How do you get it back?
So you have, on the closing disclosure, there's a line that shows that money was withheld and sent to the state of New Jersey on your behalf. You must take that form to your accountant. Okay. In my experience, a lot of times the clients will just bring normal paperwork, and some accountants will just assume that's all there is. Right. But we do a lot of digging. We ask you every type of question you can imagine, and then it comes up, and they'll say, okay, bring me the closing disclosure, and I'll prove it out that you can get your money back.
Okay, so 2 things. 1, it has to be on the closing disclosure.
Yes.
And 2, this is something that most accountants know, but not everyone actually follows through and does like the due diligence to.
Correct.
Yeah. Okay. Yeah.
They'll just assume that the form was filled out and they didn't have any taxes withheld.
Okay, so they're not trying to get you anything back.
Correct.
Okay.
Yeah, we do a lot of digging. That's what we're known for. So.
Okay. So you were saying that how like people come and like, oh my god, no one's even ever asked me that before.
Yeah, I have a lot of new clients. I had change accountants because they just don't feel like they're being covered on all ends.
Mm-hmm.
And then by the time I'm finished with them, I say, nobody's ever asked me those questions before.
Yeah.
So it's really cool. We have a good client base here.
Yeah. I've been here for many, many years.
A lot of years.
I think that's it. Okay, so now we know what New Jersey exit tax is, how to not pay it, and how to get it back if you do pay it.
Right.
Okay.
All within the scope of the law.
Yes. So to be sure, make sure you talk to your real estate agent about that. Hopefully they already know, and either hope that your accountant knows or call Jessica at Professional Services Agency in Marlton.
Be glad to help.
Thanks so much.